In my last video, I explained why I went from skeptic to bullish on Nebius. But today, we need to zoom out, because Nebius has been underperforming, while CoreWeave, Cipher Mining, and Iris Energy are ripping. So the question becomes, is the market right, or is the market mispricing the biggest AI infrastructure opportunity of 2025? Let's break this down. Right now, the market sees these opportunities like this. Nebius Group as an OpenAI proxy, GPU heavy, depreciation risk, hyperscaler competition, misunderstood business model. CoreWeave as the premium AI hyperscaler, large NVIDIA-backed clusters, already signed massive clients, the safer AI infrastructure bet. Cipher Mining and Iris Energy as Google proxies, long life power, scarce energy, predictable infrastructure economics, almost no GPU depreciation risk. This narrative is shaping stock performance day to day. But narratives are rarely accurate, especially early in new industries. Okay, let's go through all four equally weighted side by side. Nebius, the AI native hyperscaler. Core business, AI cloud, plus GPU clusters, plus software platform stack. Strengths, insane IRR growth, premium pricing, vertical integration, software-led margin expansion, hyperscaler level engineering talent. Risks, well, GPU depreciation cycles, hyperscaler competition, and high capex. Identity, the AI era equivalent to early AWS, but the market still treats it as if it was a GPU renter. CoreWeave, the premium hyperscaler. Core business, AI optimized cloud, massive NVIDIA-backed clusters, enterprise-grade workloads. Strengths, major enterprise traction, strong brand, deep NVIDIA partnership, multiple data centers already at scale. What about the risks? Well, heavy debt, capex intensity, margin volatility, extremely high customer concentration like OpenAI. Identity, the more mature, more funded, more proven version of Nebius Group. Cipher Mining, the mega power player. Core business, energy advantaged data center infrastructure. Strengths, huge West Texas power access, extremely low energy cost, perfect for compute scaling. Risks, execution on pivot to AI, regulatory risk, speed of demand shift. The identity, the power landlord of the AI era. Iris Energy, clean energy compute. Core business, hydro-powered data centers plus modular compute infrastructure. The strengths, green energy premium, clean load, institutional friendly, strong balance sheet. What about the risks? Well, growth rate slower, competition from cheaper regions. The identity, the ESG-friendly infrastructure play. This is the core debate in the entire sector. GPU depreciation, which is the bear case for both Nebius and CoreWeave. Investors fear 24 to 36 months hardware cycles, rapidly outdated clusters, new NVIDIA releases breaking down models, capex, depreciation, EBIT pressure. Power scarcity is the bull case for both Cipher Mining and Iris Energy. Power is the limiting factor. New data centers take years to connect. Regions like Texas and BC have advantages, and investors can clearly model future returns. This is why Cipher Mining and Iris Energy have been outperforming Nebius. Let's compare them directly. CoreWeave advantages: first mover scale, huge NVIDIA support, enterprise customer concentration, brand credibility, much more mature. Nebius advantages: faster IRR growth, better engineering density, deeper vertical integration, potentially larger software margin expansion, earlier stage leading to more asymmetric upside. Which one wins? CoreWeave is the safer hyperscaler. Nebius is the asymmetric hyperscaler. CoreWeave is the AWS in 2010, and Nebius is the AWS in 2008. So depending on your risk tolerance, both can definitely win. These two stocks are soaring because the world is not building enough power, AI data centers require massive megawatts, GPU supply is improving, but the grid access is not. Power is the new oil, and Cipher Mining and Iris Energy own the wells. Cipher Mining, ultra cheap power, Iris Clean Energy, ultra clean power. Neither touches GPU risk, and that's why institutions are comfortable buying these stocks. They are lower risk, lower reward versus Nebius and CoreWeave. Let's rank them by asymmetric upside, not safety. Nebius has the biggest upside because early stage hyperscaler, software margin expansion, faster ARR growth, biggest valuation gap versus total addressable market. If Nebius becomes the fourth hyperscaler, that's how you get 10 to 20x. CoreWeave, still massive upside, but more mature, less asymmetric, better execution history. A 4 to 8x is possible in a strong AI cycle. Cipher Mining, solid upside. If AI compute demand matches current projections, Cipher can do 2 to 4x from expanding power capacity. Iris Energy, good upside. Cleaner, safer, more institutional friendly than Cipher Mining, but likely in the 1.5 to 3x upside range. The biggest risks for Nebius and CoreWeave are hardware depreciation and capex cycles. The biggest risk for Cipher Mining and Iris Energy are power regulation and slower demand adoption. Share risks for all of these companies are data center oversupply, financing conditions, NVIDIA supply dynamics. No one is risk-free, but the risks are different. I'm a shareholder of Nebius. I understand the GPU risk, but I also understand asymmetric bets. If Nebius executes on software-led hyperscaling, the upside dwarfs the rest. If I want a lower risk and cleaner modeling, I'd overweight Cipher Mining or Iris Energy. If I wanted a proven hyperscaler with scale, I'd look at CoreWeave. But for generational upside, Nebius still holds the crown. Let me know in the comments, are you team Nebius, CoreWeave, Cipher, or Iris Energy? Or are you building a basket of these? Smash the like button, subscribe, and see you next time.